Okay, so good morning everyone. And today we're going to be doing top to bottom analysis on copper. We're going to be doing analysis on copper, which is, although not considered as precious as gold or silver, it is still a precious metal. Okay, so we start by identifying our market zones. There seems to be a psychological level here because price has responded multiple times to this specific level right here. As you can see, price bounced over it the first time. Price passed through it, but then came back to retest it. Retested it again, and passed through it twice. After passing it through it twice, I would have said, okay, this zone is no longer valid. But price came to show some respect here. Price did the same here, and then price did the same here. So that means that this zone is still valid. There's another zone here. There's a zone here, but it doesn't seem to still be valid. There's a zone here, there's a zone here, which is the previous all-time high. This is zone around this level, but it doesn't seem to still be valid. Let's mark it up though. Let's go down to the daily time frame. This is our trend origin. Market structure looks like this: impulsive correction, impulsive correction, impulsive correction, impulsive correction, impulsive correction. Price doesn't manage to close above these points. So we have an impulsive to here. Correction out here, impulsive here, and correction. So price is currently in the middle of a correctional move. So price is currently in the middle of a correctional move with the expectation that to become impulsive. Trend line can actually be drawn on the weekly time frame. Across these points. Yes. The trend line can be drawn on the weekly time frame. Across these points. I believe I actually forgot to draw it. This is our weekly trend line. Now, much like our zones, is just for the sake of a point of reference, because price does not necessarily obey so much detail. Okay, so this is the market structure on the daily time frame. As this price is currently in a correctional phase, that means that this is among the most ideal situations that we can have right now. We can spot a pattern that price prints out whenever it is switching from correctional phase to an impulsive phase. Then we'll be able to use that pattern. And we'll be able to use that pattern to catch the entire impulsive move. So this looks like a W pattern here. This looks like a W pattern here. And this looks like another W pattern. Rather than W pattern, this looks more like a slanted W. So you might say double W's appeared at this point. I might consider this a high W, but at the same time, it's fairly small. It doesn't seem like it might have a very great relevance to the general price movement. This is a W pattern here, but this one will be very hard to take a trade off of because by the time we enter the trade, price has already climbed very high, but still though. So a W pattern with a big impulsive, a big bullish engulfing candlestick. You can see that this W pattern actually has two big bullish engulfing candlesticks. So maybe that's something I should be looking for. A W pattern that contains bullish engulfing candlesticks. No matter how I look at this okay, at first glance, this looks like a range. Wrong. Yep. You can see that price bounce once, twice, 3, 4, 5 before breaking out of the range. So maybe this is another pattern I can expect. A rectangular range. A rectangular range is a fairly common continuation pattern anyways. Trend. A rectangular range is a fairly common trend continuation pattern. But look at this. We have a W pattern here. Right before the major upward move. Okay, look at this. You can see that price forms a range and does not particularly move in any direction. But then when this fairly large W pattern appears, price starts trailing upward. Here we can see a very clear W pattern right here before price starts trailing upward. Here there's a big dip. Price comes down and then forms a W pattern here before starting to climb upward. So it's very clear that we should be looking for a W pattern. Of course, there's also the potential for a range, but we should be more. We have a H4 trend line here. We have a H4 trend line here, and we should be looking for a range, and we should be looking for a W. Of course, if a range appears, we can also take the trade, but we should be looking for a W. So if price has gone like this, if price comes back down here and then comes up like this, then we'll, with full chest, taking a trade like this. So right now, we're just looking for the appearance of a W. Once a W appears on this pair, we're in on a trade. Once a W appears on this pair on the 4-hour time frame, we're in on a trade. So that's it for top to bottom analysis.